According to the World Bank forecast, Kenya's GDP growth will rebound to 5.9% in 2020, even though a slowdown is likely this year. Kenya Economic Update report shows that growth in 2018 was driven by favorable harvests, a resilient services sector, positive investor confidence, and a stable macroeconomic environment. Though the private sector demand side is on a high, investment still remains subdued due to reduced credit sector investment. The World Bank says Kenya began on a strong footing in the first quarter of the year, backed by real growth in consumer spending and stronger investor sentiment.
So basically, the slack in the demand side is reflected by the slowdown, for example, in imports and machinery to the industry. We also see a slowdown in credit to the private sector. And we also have heard that several companies have been giving profit warnings.
The drought situation that continues to ravage most parts of the country is now going to be Kenya's biggest growth impediment.
Kenya has 6 agroecological zones, and only 5% of the land is suitable for maize, very suitable for maize. The rest is either moderately suitable or not suitable or poorly suitable. So growing maize in moderately suitable or poorly suitable or not suitable makes growing maize very expensive affair. And that is why the farmers are always complaining about high production costs.
Long rains, which was expected between March and May but failed, will see a decline in agriculture productivity and poor harvest. Already the government has been forced to intervene through emergency measures which will impose fiscal pressures, which the bank says will lead to development expenditure cutbacks.
And the ministry is also looking on the market end. We want to get ourselves somehow out of the market environment for agriculture so that we can let the private sector do that part. That means reforming NCPB radically and introducing a warehouse receipting system and commodity exchange so that the role of government remains that of regulation and creating a good business environment.
Nonetheless, it is not all doom and gloom, as the economic experts say. The World Bank's 2019 Economic Index for Kenya shows that other indicators such as inflation and exchange rates have remained stable.
There's positive sentiment in terms of growth because this index is above the 50-point mark. Okay? So that's good news. At the same time, the macroeconomic environment in the first quarter has also been stable.